The last time all 5 financial crashes happened at the same time, 70 million people never came home. That was World War II. Right now, in 2026, all 5 are happening again, simultaneously, and most people are completely unaware. Here's what makes this moment different from every previous warning you have ever heard about economic collapse or global conflict. This is not opinion. This is not politics. This is a financial pattern that has repeated itself without a single exception across 2,500 years of recorded economic history. Every empire, every currency, every world war, the same 5 crashes in the same order every single time. And according to that pattern, we are currently living inside crash number 4. Every empire that ever collapsed started here, with a number that became impossible to ignore. Rome didn't fall because of barbarians. Rome fell because it ran out of money. The military kept expanding, the treasury kept emptying, and the government kept borrowing to cover the gap until the gap became the government. The United States currently carries $36 trillion in national debt. That number grows by $1 trillion every 100 days, which means by the time you finish watching this video, it will already be higher. To understand the scale, if you spent $1 million every single day starting from the year 0, you would still not have spent $1 trillion by today. America owes 36 of them, but here is what most analysts miss entirely. The number itself is not the crisis. The crisis is the interest. In 2024, the United States paid more in interest on its debt than its entire national defense budget. For the first time in American history, debt servicing became the single largest line item in the federal budget. That specific milestone has happened twice before in modern history. The Ottoman Empire crossed that threshold in 1875. Within 40 years, it no longer existed. The British Empire crossed it in 1947. Within a decade, it had surrendered its global reserve currency status to the United States. Debt spirals don't resolve themselves. They migrate. They move from government balance sheets into central banks, and central banks, across every era of history, respond the same way. They print. In 1921, the German government faced an impossible debt from World War I reparations. Their solution was the same solution every desperate government reaches for throughout history. They printed money, aggressively, without limit. By November 1923, the exchange rate was 4.2 trillion marks to $1. A postage stamp cost 50 billion marks. Workers demanded to be paid twice a day because by afternoon, the money they earned in the morning had already lost significant value. People burned cash for heat because it was cheaper than firewood. And into that economic devastation walked a political movement that promised to restore national greatness. The rest of that story, the world knows very well. Now look at this number. The Federal Reserve printed more money between 2020 and 2022 than in the entire previous history of the United States combined. The entire U.S. money supply increased by 40% in less than 2 years. The result was the highest inflation in 40 years. Not a coincidence, a direct and historically documented consequence. And here is the number that should concern every person watching this video. The US dollar has lost 97% of its purchasing power since 1913, the year the Federal Reserve was created. The dollar in your wallet today represents 3 cents of what it represented 100 years ago. Currency debasement doesn't collapse economies overnight. It erodes them slowly, quietly, and visibly until one morning the erosion becomes visible to everyone simultaneously. And that moment of collective realization is historically one of the most destabilizing events a society can experience. Because when people stop trusting their currency, they stop trusting their institutions. And when institutions lose public trust, populations become available to narratives that were previously unthinkable. That is exactly what happened in Germany. And the pattern always delivers the same companion next. October 24th, 1929. Black Thursday. The New York Stock Exchange lost 11% of its value at the opening bell. By afternoon, thousands of Americans were standing outside their banks. By Friday, the banks were closed. Not temporarily, permanently. 9,000 American banks collapsed between 1929 and 1933. The savings of millions of ordinary people, gone. Not stolen, simply gone, because the institutions holding them no longer existed. That banking collapse didn't cause the Great Depression alone, but it transformed a financial crisis into a decade-long catastrophe that completely restructured the global political order. In March 2023, Silicon Valley Bank collapsed in 48 hours. $209 billion in assets, gone. The second largest bank failure in American history. 2 days later, Signature Bank followed. 1 week after that, Credit Suisse, founded in 1856, a 167-year-old institution, acquired in an emergency weekend transaction orchestrated by the Swiss government to prevent a wider collapse. Federal officials described the situation as contained. In September 2008, federal officials also described the situation as contained. 12 days later, Lehman Brothers filed for the largest bankruptcy in American history and triggered a global financial crisis that cost the world economy an estimated $22 trillion. Banking collapses don't announce themselves. They happen quietly, until suddenly they don't. But here's what the history books never emphasize enough. Banking collapses don't end in boardrooms. They end in governments looking for someone to blame. And governments that need someone to blame always look outward. That is the bridge to crash number 4. Up to this point, everything we've discussed is internal pressure. Crash number 4 is where that pressure turns outward. Summer 1941. The United States imposed a total oil embargo on Japan. Japan had no domestic oil production. Their navy, their air force, their entire military and industrial infrastructure ran on imported fuel, 80% of which came from the United States. The embargo didn't just threaten Japan's military ambitions, it threatened Japan's survival as a functioning nation. Japan's leadership faced a binary choice: accept economic surrender or respond militarily. On December 7, 1941, they responded militarily. The lesson most people take from Pearl Harbor is about military miscalculation. The lesson financial historians take is different and far more important. When economic pressure threatens national survival, the war calculation changes completely. As of 2026, the United States has imposed 145% tariffs on Chinese imports. China has responded with 125% tariffs on American goods. Both economies are absorbing significant and escalating damage, but the tariffs are not the most important data point. China imports approximately 73% of its oil through a single geographic choke point, the Taiwan Strait. The United States 7th Fleet operates throughout the Western Pacific. That is not a trade dispute. That is the same structural geometry that existed between the United States and Japan in the summer of 1941. This is not prediction. This is pattern recognition applied to documented structural similarities, noted in published research by analysts at the Rand Corporation, the Council on Foreign Relations, and the Brookings Institution. Trade wars have preceded every major global conflict in the industrial era, not because trade wars directly cause military conflicts, but because they create the specific economic conditions under which military options become more politically attractive than diplomatic ones. And there is one final crash remaining, the one that throughout all of recorded history has never occurred without fundamentally restructuring the entire global order. Approximately every 80 to 110 years, the world's reserve currency changes. The Spanish real dominated global trade for 150 years. When British economic and naval power surpassed Spain's, the pound sterling took over. The pound dominated for approximately 200 years. When World War II ended, the Bretton Woods Agreement of 1944 established the US dollar as the world's reserve currency. That was 82 years ago. Every single one of those transitions happened through conflict, not negotiation, not cooperation, conflict. The BRICS Economic Alliance, now representing 45% of the world's population, has formally announced development of an alternative settlement currency. Every primary BRICS currency begins with the letter R. Analysts call it the R5. Saudi Arabia, America's most strategically important energy partner for 5 decades, conducted oil transactions denominated in Chinese yuan in 2023, not as an experiment, as a documented policy shift. Global central banks purchased more gold in 2023 than any year since 1967. Central banks accumulate gold when confidence in existing reserve assets is declining. The dollar's share of global foreign exchange reserves has fallen from 73% in the year 2000 to approximately 58% today. And here is what that means for every ordinary person, not just governments and central banks. When the dollar loses reserve currency status, your savings, your pension, your salary, all denominated in a currency the world no longer needs, face a structural revaluation that no government policy can prevent. That is not abstract. That is exactly what happened to every British citizen in 1947. Overnight, the pound didn't disappear. It simply stopped mattering the way it used to, and an entire generation's savings adjusted accordingly. No empire in recorded history has voluntarily surrendered reserve currency status. Rome didn't. Britain didn't. This is crash number 5, and it is already underway. Step back and look at the complete picture. Crash 1. $36 trillion in sovereign debt, growing by $1 trillion every 100 days, the identical debt spiral that preceded the collapse of the Ottoman and British empires. Status: active. Crash 2. Money supply expanded 40% in 2 years. Dollar has lost 97% of its purchasing power in 1 century. The same debasement pattern that preceded Weimar Germany. Status: active. Crash 3. 3 major banking institutions collapsed in 1 week in 2023. The Federal Reserve's emergency lending facility recorded its highest usage since 2008. Status: active. Crash 4. 145% tariffs, 125% counter tariffs. Strategic choke point tension over the Taiwan Strait. The same structural geometry that preceded Pearl Harbor. Status: active right now. Crash 5. BRICS alternative currency in active development. Saudi oil sold in yuan. Central banks buying gold at 1967 levels. Dollar reserve share declining consistently for 25 years. Status: already underway. The historical record contains no example of all 5 conditions existing simultaneously and resolving without significant geopolitical restructuring. Not one. That is not alarmism. That is what the pattern shows, applied carefully, analytically, and honestly to the documented evidence. Here is what separates the people who navigate historical transitions successfully from everyone else. It is not intelligence. It is not wealth. It is not access to information that others don't have. It is timing, specifically the timing of awareness. The Germans who recognized the hyperinflation pattern in 1921, 2 years before the peak, preserved what they had by moving into hard assets before the mark became worthless. The investors who studied the 1929 banking system carefully identified the structural fragilities and repositioned before Black Thursday. The analysts who modeled the 2008 mortgage market correctly were on the right side of history before Lehman fell. None of them predicted the future with certainty. They recognized a pattern. They respected what that pattern historically indicated, and they acted on that recognition before the majority of people were paying attention. That is the only edge that has consistently worked across 2,000 years of economic history. This channel was built on a single premise. Financial history contains patterns that repeat with enough consistency to be genuinely useful if you study them carefully, honestly, and without the filter of what you want to be true. So here's the real question. If you had to pick one of these 5, which one do you think is the most dangerous right now? Is it the debt, the currency, the banks, the trade war, or the shift in global power? Because history doesn't move randomly. It moves where pressure builds the fastest, and I'm curious, which pressure do you think breaks first? Every major shift in history felt unpredictable until you looked at it after it happened. Then it looked obvious. The difference is never information. It's timing. Most people don't miss patterns because they're hidden. They miss them because they're uncomfortable. to make those patterns visible before they fully play out. Because once you see the pattern clearly, you stop reacting and you start preparing. If you want to understand what happens next before it becomes obvious to everyone else, subscribe.